Meantime, Jim's
Very
right.
happy about that.
Two beautiful words are Mad Money. Tonight at 7 on CNBC, we are celebrating 2 decades of Jim's Mad Money in a special anniversary event, looking back at the show's incredible run. Here's a sneak peek.
Let's try to make some money, Mad Money. The company has had a history of being able to pull rabbits out of the hat when you run out of money. Are you guys okay?
I think we're fine. In retrospect, everybody wants to figure out, was it timing? Was it good luck? What was it?
This one went right at Main Street. He spoke in a language that was more accessible to more people. And that was a breakthrough in everyone.
He knows so much about the home, but he explains it in a way that anyone can understand.
And he does it with the energy and passion that he brings to everything he does.
The chaos ensuing created a much broader audience. But importantly, his message, though, if you got around the theatrics, the message has been consistent now for the entire 20 years.
I make it so that it's digestible and even fun. And because of that, they'll open an account, they'll watch a CEO, they'll listen to me. Hopefully they'll make a little money. So the longevity comes from teaching.
I think we got lucky with the timing of when the show came on the air. There was this explosion of retail investing, and that coincided with people who were looking for some direction on where they should invest. And here was this guy who came along who was a little crazy and all over the place and giving them advice, and it just worked.
Take a look at the podium today. Jim's going to ring the bell in a few minutes. You did today's show yesterday.
Right, well, it is chilly. You've got a lot of people whom I look, it's not about friends, it's about money. But when you see a Tim Cook, a Larry Fink, a Jensen Wong, a Jeff Zucker,
That's amazing.
Of course, when you see Mark Hoffman, who was the person who greenlit it, you get chills. I mean, I'm like thinking, oh my God. I mean, these guys, I didn't know about it. What I did was deliberately not look, and I can't believe it. I mean, these are guys like, oh my God, they actually like me. I mean, like, I thought they thought I was like a I mean, you know what I mean?
Do they like you or do they fear you? I don't know.
Well, I mean, I didn't mean to, look, we had a big news day, but I'm very grateful to the network, to KC, to obviously Regina, and there's so many people. But wow, it's nice to see people whom you really, truly respect understand what I've been trying to do. I was a hedge fund manager. I worked at Goldman. I was trying to demystify. And a lot of times it didn't come over at the beginning because it seemed too crazy.
Knowing what you knew at the time about television, Jim, and sort of mercurial programming decisions, right. I can't imagine you expected it to last 20 years.
No, as a matter of fact, I had a piece that when we did the 1,000 bell ring, I was thinking that was it. When we did the 10-year, I was going to announce my retirement because it was all crazy and I didn't think it had any longevity. In the first 5 shows, I so embarrassed myself that there were people like saying, will you please, Dad? Will you please, Dad? And now, like, my daughter's here, or not that I can find her. But, you know, it was massively embarrassing to my family. Massively. They're like, oh, my God, Dad. I mean, like, could you, like, come on, Dad? That's what it was like, David.
20 years is amazing. It really is. It is a worthwhile thing to celebrate.
Well, I will tell you,
doing something, and by the way, alone. It's one thing.
It was a one-man
we got
show.
a great thing here, but it's
I was trying to be
ensemble
Carson.
Is a lot more fun and easier to some extent than showing up every day and doing it.
It's all you. And you have to say something every night.
Right, and I'm going to tell you who, and I never revealed this, who told me to do this show. It was Rune Arledge. Rune Arledge said, I don't remember your name, but you're Madden. You're Madden for business. You got to get a Madden show. Not that I have a Madden game. But he said, you, Madden. And one time he introduced me to Barbara Walters as Madden. I said, I'm not Madden. But anyway, he did. He said, Barbara, I want you to meet Madden. I don't know his name, but he's Madden. He's Madden for stocks.
Rune Arledge was a programming genius.
He was programming genius.
There you go.
So, there's a new one, a little factoid that has been left out.
We're going to let you get ready and head up to the podium.
Yeah.
Jim's going to ring the bell in a few moments.
I'm sorry to Secretary Besson. I mean, I love the guy. I mean it a lot. He's 35 years, but it's my time.
First things first.
It's your time. We'll take care of things while you're gone for the next 10 minutes or so. Don't you worry.
I count on you.
Yeah, well, I'll be here for you.
Thank you. So proud of and happy for Jim.
Thank you.
As he makes his way up to the podium, we'll get through some earnings as well. We'll talk some GM, Pfizer, UPS, PayPal, Spotify, SoFi, Honeywell, and a lot more. Squawk in the Streets. Back in a moment. Makes his way upstairs to the podium to ring the opening bell. That bell is just a few moments away. Jim, of course, going to ring it with, I believe, some members of the Mad Money team as we celebrate 20 years.
That's Jim's daughter there.
And of course, Lynn Martin from the New York Stock Exchange. So proud of him. It's just a few moments away. Stay with us. Jim Cramer is going to ring the NYSE opening bell, celebrating Mad Money's 20th anniversary. As we wait, though, and they get prepped, let's bring in Bob Pisani, talk about what's actually a pretty busy day on the earnings front, Bob.
Well, first, I got to say congrats to Jim Cramer. I mean, when I got here in 1997, I was the stocks correspondent. Cramer was already famous. Cramer Berkowitz was down the street, you might remember, right on the Wall and Water Street. I used to walk down there and talk to him, and already he was fully formed as Jim Cramer. So I just think the world of this man. He has helped lead us and helped lead the modern financial reporting world. And I just think the world of him. We all do here at CNBC, and wish him nothing but further success on that. I think what's important this week is we're going to see earnings from Microsoft, Meta, Apple, Amazon. Earnings already have significantly come down for the second quarter. The overall numbers have come down. We had 10.5% expected gain for the second quarter. Now it's down to 8.7% for the S&P 500. Tech's come down about 2%. So they're already trying to adjust things. I mean, the good news, though, is we were in like a lion and out like a lamb. The volatility's lower. I talked to David yesterday about the advanced decline line improving. The whole overall situation is better. Bond yields are better, for example. Bond yields have stabilized. So the bad news, though, is that the macro picture is very murky, as you keep talking about. The impact of tariffs is not apparent yet. So we have a lot of companies warning that their costs will be higher and that consumers will likely be paying more for common household items. We don't know how to model that very well yet. So it kind of leaves stocks. Where's stocks? It leaves them a bit in a netherworld right now. The market's not oversold. That's good. The technicals are a lot better. But the macro is very murky. And as a result, there's not a lot of enthusiasm to try to push the market significantly higher. You see that fade yesterday that we had. Started on the upside and then just quietly sold tech stocks off into it, which had already had a significant rally. So I think the thing to take away from this is the wild ride we've had. There was a 13% move from the high to the low in April. That is unprecedented. You have to go back to March of 2009 to see that kind of move in a single month. And I think the takeaway here is don't do anything crazy in a wild market. It really is better to stay put. Jack Bogle, who probably had the biggest influence on me than anybody, the founder of Vanguard, once say, don't just do something, stand there. And yes. Sometimes the urge to do nothing is the best urge and the most important kind of advice here. And a lot of people, I think, probably will take that away from here. And there's Jim.
There's Jim. To Jim's right is Regina Gilgan. David, his longtime executive producer. Cliff Mason, his nephew. His daughter, Emma. Heather Gaines, another producer on Mad Money. It's a reminder, David, just how much teamwork goes into making that show happen.
Every single day, of course, as you say, nephew Cliff, who runs the show. It's an amazing accomplishment. As you and I have, given how long we've been at it.
It definitely changed the face, certainly, of financial journalism on TV. And our congratulations to our colleague right there. What a great day for Jim. Meantime, there's the opening bell. So look at Brett and the CNBC Real-Time Exchange at the big board. Mad Money with Jim Cramer celebrating the show's 20th anniversary here on CNBC. At the NASDAQ, it's Churchill Downs celebrating the Kentucky Derby, which is coming up this Saturday.
This time I don't mind the noise. It's the one time.
Thank you, David. Thank you, Carl. Thank you, Bob.
All right. Way to go. He's going to be back down here shortly. We'll hustle back down here. We got any number of earnings, Carl. I don't really know where you want to start, given just the torrent, really. I mean, I'll hit Spotify. It's down about 7%.
Travel and expenditures.
He's back.
Leisure.
He's back.
He's back.
I go there.
Where do you go?
The street from to Brinker.
Oh, to Brinker.
To Chili. I love it.
Chili's.
I'm not kidding. I went. There's a great one right near Route 10. You guys know that one?
Yep.
Margaritas.
Register card. Olive Garden.
Margaritas.
Fantastic.
Welcome back.
I don't want to miss anything.
Congratulations.
It is thrilling. It's scary. You've got this 29-50 thing, and all you can think of is don't screw it up.
Don't.
It's like Havlicek stole the ball in the Sixers, the key title game 72 years ago.
And whatever you do, don't take your finger off the bell and then put it back on.
No,
That's really bad.
I mean, I was totally conscious. just that it was not an important news day. There were look, this is a day where nobody reports. So there's plenty of time. And it was always about me anyway. That's what my mom always said. Jimmy, it's always about you.
Always.
You know, anyway. I remember when we used to come, when I became the stocks correspondent, I used to go visit you at Cramer Berkowitz. Down the street, right on Water Street.
And Berkowitz just said Mazel Tov. Well deserved.
There he is. Still in touch with all those people.
You know, it was funny. You would come in because you were just endlessly trying to find out what's underneath, as always. And, you know, each day, people have to understand there's like a subcurrent that happens. Like we were trying to figure out very quickly about Amazon. I mean, if everybody's going to say negative things, then why should Amazon be focused on? But you have to have that insight that you brought to it. It makes people at home realize, wait a second, I can demystify it. I'll tell people what people are thinking.
I remember one day I came to Cramer Berkowitz. It was 97 or 98, and I was having a question about a company that had gone public that was doing disk drives. And you, on a piece of paper, drew a disk drive for me.
Yeah.
And you said, here's the arm that comes in to actually read it. Now, here's what this company is doing that's really innovative. He had a whole thing on the page, actually drew a disk drive for me and said, this is why I like this company.
Well,
that was 1997.
Yeah, I was ahead of the game.
You were.
I mean, I had a cat named Comag that made the substrate, but it got hit by a truck, and I realized what that means with the dead cat bounce. The thing bounced like 3 feet high.
Oh, gosh.
I'm not,
Here we go
hey,
again.
it's okay. It's okay.
It's okay. Comag didn't make it, though.
No, Comag never made it.
No.
Bob, thanks for coming,
pleasure.
helping us
Thank you,
make
Jim.
the bridge.
Thank you for 20
Thank
years,
you, Bob.
20
Thank
more.
You so
Let's
much.
hope 20 more.
Thank you. Thank you.
Jimmy, impressed with the way Bob mentioned some of these cyclicals, Honeywell today, Sherwin, Williams.
Well, you know, I think that they're supposed to be bad, but one of the things I said last night was, look, this is there are 403 stocks that are good, but we focus on 7 that are bad. Let's focus, except for Jonas focusing on, obviously, on Tesla. Let's focus on the other 493. We're too hung up on the other 7. The other 7 have too much scrutiny, and they just have lots of people gunning for them, including often the president.
Yeah, well, apparently, yeah, on Amazon, which we discussed. Carl mentioned Honeywell. The stock is up 4.5%, but the big show is going to be a long time, which is the breakup of the company.
Yeah. In the meantime, I have my daughter here, and it's just driving me crazy. Can I just bring her up for 1 second?
Sure, yeah, of course.
Emma, get up here for 1 second. So, this is my daughter, Emma Cramer. Not shocking that last name, I hope. But I love her very much, and thank you for coming.
They look so much alike, don't they?
Well, that's yeah. Worst thing you ever said about her, best thing you ever said about me. But she's a big follower of the stock market.
Yeah.
Yep, and she had, focuses on a lot of S&P.
Of course.
That's what you want,
yeah.
S&P. But, deeply understands kind of what we do, right?
Yes.
By study. She got her own potato chip company.
Right.
Folds. You'll all be eating it.
We could spend years talking about what it's been like to be his daughter,
yes.
but we won't do that now.
Actually,
yes.
I think we just leave that on the table.
Okay.
Leave the cutter in basement is what they say. Anyway, thank you, Emma. Sorry I completely mortified you, but that's what happens when you're my daughter.
Yes.
Right?
Very lucky.
She loved Mad Money when it started. She put a bag over her head. She went to school with 2, just kidding.
I imagine she probably did. She ever critique the show at night?
Actually, she'll say that there were certain segments. Now, her sister said, Dad, that was the greatest show ever. My father said it at 7 p.m. every single night. It'd be the phone call. And, when you're after 8 years, you're like, oh, God, there's Pop.
Yeah.
And then one day you say, oh, my God, where's Pop?
I know you this morning, there are days where you still wish they could see it.
Oh, my God. It's like, geez, why in the phone set up? But CC will fill in. She'll call me and say, Dad, best show ever. Which was all that my father had ever said.
One thing I thought was interesting that she wrote about, what she talked about last night was the job market and how you really don't seem all that worried, at least for now, about degradation in the labor market.
No, I don't. And it's rather amazing. I mean, you hear saying that you might be firing a lot of workers. When you're out with Jensen, what Jensen says is the greatest crisis is not the power crisis, is the CEO and co-founder of NVIDIA. It's the worker crisis.
Yeah.
And if we don't have so-called humanoids, Adam Jones, then we're going to be in major trouble. So he's taking the other side of the trade, which is to say, look, we have no birth our birth rate is just diminished.
Yes.
We don't let anybody in from other countries. So what are we going to do? And now I know a lot of people are saying that his chips cause such a demand for power that therefore, China's doing this and that and this and that. But Jensen says the opposite. He says, look, if we don't have enough people to do dirty jobs, to do dole jobs, we just don't have them.
Well, that gets to
Dangerous
this
jobs.
report today from, or at least, actually, they put out a kind of a video so weekend as well.
Coca-Cola?
No. I'm talking about Morgan Stanley on humanoids and the market that they see for them.
Absolutely.
I watched this video they did as well about it. But the report is that it's very long. But, the headline is $5 trillion global market by 2050. Now,
Bigger than the global auto market.
That's far in excess of the global auto market. I would, to put in
You
this
push
in
back to
perspective.
$6 trillion? Are you
Well,
pushing back?
I do recall, and I know you guys do as well, when Morgan Stanley came out and was talking about flying cars. I like to call them flying cars, eVTOLs, saying it was at least $1.5 trillion market by 2040.
Okay,
now, they still have 15 years to go. And could be as high as a $2.9 trillion market. So I would put this in some perspective, but nonetheless, $5 trillion. To your point, though, they say it's going to take a little while before we truly see the progress that we need to create humanoids capable of doing what they call useful tasks, and the prices come down to a level that is necessary to allow widespread adoption and, of course, our own societal and political acceptance.
At the same time,
they see it coming.
Should Mothers Against Drunk Driving come out for humanoids, given the fact that we know that impaired people are one of the great reasons why we do
should
need...
come out for autonomous driving,
Yes, don't you think?
Yes.
I mean, I think that we're all kind of dancing around a big issue, which is that humans are fallible.
Yeah.
But the machines, especially the ones that are run on NVIDIA...
There's my favorites, the dancing robots.
Wow.
And Morgan Stanley does have a large number of potential beneficiaries over time from this. Of course, we come back to China and the trade war. The Chinese are also very the key. By the way, the key beneficiary, Tesla. Of course, you hear from Musk all the time. If in fact they do get to that level of production, it will be an enormous business for them, no doubt about it. If in fact Morgan Stanley is right in any way. The Chinese, though, also they're ahead in robots, they're ahead in batteries,
Absolutely.
so the two go very well together.
But I went to Rusty Brazil, RBN, who's my best energy guy, and he did point out to say to Dave, listen, our natural gas, more natural gas than anybody in the world, so if we can just get the machines to make it so we burn that, we will not have the problem that you were including. Yes, they're building coal plants, they're building nuclear plants, and we are eventually going to be building nuclear. But I do think that we should mention that our source of natural gas, which, by the way, the Chinese are rejecting, is plentiful, at least.
Without a doubt. What you're talking about, of course, as we were discussing yesterday, where are we in the AI race? Well, clearly we're ahead in terms of our chip design with NVIDIA. We're most likely still ahead when it comes to large language models, even despite the advances of DeepSeek. But given Huawei and what made this new chip, even if you need more of them, the point is that the Chinese have the ability to create more power more quickly than we do.
Absolutely, because they don't really have...
And your point is that natural gas, obviously, in its abundance here, it's not like we don't have the underlying fuel, but we still need to create the grid and the generation plants that can use that natural gas,
the grid
and others to power the data centers that use the NVIDIA chips that will keep us ahead, so to speak.
Yeah, well,
in
what's
this
incredible
race.
is that we never thought we'd have to grow the grid. So no one ever thought, well, hold on, we need equipment on this.
Now, I mean, some of the estimates are the enormity of them, what, in terms of what needs to happen over the next 5 years.
And by the way, the heat issue is also very big.
Meantime, Brent headed for worst month since 21.
Unbelievable.
Down 13%.
And we should say Mr. Brent's out talking to Howard Ludwig today, Brian Sullivan.
Yes.
It's really going to be great. By the way, no one knows what he's going to say, including perhaps himself.
Including Howard, yeah, he may not.
No, I mean, everything's so on the fly. I wish people knew. I didn't know Besson was going to be speaking. All I knew is he's been in the business for 35 years.
35 years. Not all of them that good, but 35 years. I was looking at his performance numbers. Yeah.
How do you do? Easy come, easy go.
Look up his AUM over time. It's an interesting chart.
He was a hedge fund manager.
Yes.
He made some money for himself.
Was he long Regeneron going in?
I don't know how his fund holders
He doesn't
did.
trade.
Yes.
But Regeneron, first guest that we had on Mad Money.
Yep. Down a bit today.
Yeah.
Watch bonds, 10 years south of 4.2. We got some international trade numbers. Deficit in March, another record, of course. We'll get conference board and some jolts in about 12 minutes. Stay with us.
and welcome to the world. We call my world Mad Money. I want to help make you rich, really rich. What is mad money? It's that little bit of extra money. No, scratch that. It's a lot extra money. And that you can make by making the right investments. Look, I spent 25 years getting this right. 25 years on Wall Street, making all sorts of people rich. Now it's your turn.
Jim, on the premiere episode.
This is ridiculous.
Mad
Can you believe the hubris of that class?
That was quite a lot.
Yeah,
yes.
that's before the sleeves got cuffed.
Yes, and before my editor and only writer, Cliff Mason, who was here, my sister's kid, 19 years ago, joined us as a high schooler and became our head writer. As our high schooler. That shows you exactly how mature we were.
How many words a night would you say?
How many words a night? Yep. 7,000.
Whoa. Yep. That's a lot of content.
Well, it's like we write a term paper every single night.
Yes.
So, are you done now? Is this it?
You know, on the 10th, I was actually going to surprise everybody and say I'm done.
Yeah.
Yeah, but then my wife was like, "What are you going to do? You don't play golf. You're just going to like." And I said, "Okay, don't worry, I won't quit." No one really wants me to quit in my life, which is really says something in itself.
Actually true. No one here either. Yeah.
No one wants me to quit. But, David, tonight I'm going to shock your world.
You are.
And commit to another 20 years.
We do invite you to watch, of course, all week, I guess, right?
I've not watched, yes, and I've not watched the video tonight at 7 that people tell me that bring a handkerchief.
We look forward to it. 7 p.m. Eastern Time. Mad Money, 20 years, a CNBC special. Jim, congratulations.
Thank you, guys.
So
Well, I
happy
love
and
you guys.
so proud.
Thank you. Thank you.
We love you too, Betty.
Well, no, that's cynical.
Rats. What do you mean? I'm not being cynical. I'm being serious.
What would Belle say? What would his mother say?
She loves you.
There you go. I'll take that.
You know that.
When we come back, Coke's James Quincy on earnings, tariffs, and the consumer. Don't go away.
Treasury Secretary Scott Bessent was speaking at the White House this morning. Of course, as you might imagine, a lot of the focus was on tariffs. Megan Casillo, she's at the White House and has some of the highlights for us. Megan?
Data you had a briefing that focused mostly on tariffs, a rare briefing from the Treasury Secretary at the White House here this morning. One piece that is moving the markets this morning was the White House responding to a report that Amazon is planning to change its prices online to show exactly how much of the price tag is due to tariffs. Take a listen here to the White House's response.
I will not speak to relationships with Jeff Bezos, but I will tell you that this is certainly a hostile and political action by Amazon.
Now, Bessent did not want to offer any specific timeline as far as what to expect on trade negotiations. He was asked about that several times. He did highlight substantial progress, he said, with 3 countries, that's South Korea, Japan, and India, previewing some more to expect on that front. And while he didn't want to comment directly on this question we've been asking for days about whether President Trump and President Xi have been in touch specifically about tariffs, he did say this. Take a listen.
Over the next couple of weeks, as I said, we have 18 important trading relationships. We'll put China to the side. 17 they are in motion.
Almost saying the quiet part out loud there. 17 are in motion, with one we can assume put to the side is not yet in motion, and that's China. Finally, guys, I did get a chance to ask the Secretary if he could detail for us just what to expect on the auto tariff relief front, which we are expecting to hear more about later today. He would not give us those specific details, but said it is coming. This comes as a result, he said, of the president's meeting with both domestic and foreign auto producers, and that we'll see the details of that executive order later this afternoon. Guys.
Megan, good to hear that the trade deals, the talks are in motion. Is the best case scenario here that if they reach a deal, we get to 10% still higher tariffs on everyone else? Because that's where we are right now. And there were higher rates announced, but the grace period until they make deals went away. So is that what investors should expect if those deals are made? Still 10%?
Exactly. That's what we've been told so far. Kevin Hassett on our air said a few weeks ago he would be very surprised. It would be a very big deal if that 10% baseline tariff ever comes off. So this is about those higher tariffs that are now on pause. The other thing to keep in mind, and that investors need to keep in mind, Sarah, is that these are going to be agreements in principle or memoranda of understanding. Scott Bessent has told us that explicitly. That means probably nothing on paper for the first little while. And when I've talked to lawmakers and to manufacturers, they're worried about the enforceability of this, and they're worried about the certainty. They're not ready to make long-term investment decisions just based on an agreement in principle. So while it will be a step forward once we get some of these announced, there's still a long way to go after that.
Yeah, it's a very important point. We'll see if we do get those agreements in principle. The market may react, but to your point, Megan, it's not clear that decision makers will necessarily follow as well. Megan Casella at the White House. Speaking of course, tariffs, GM shares are under pressure this morning.